So as I was saying, we'll go down to the execution last, where you get to find out how to trail your stop loss, whether to use EMA to trail your stop loss or to use price action. At this point for today, for example, this trade hit our stop loss and moved in our direction. This is the thing I was saying. Price is creating new higher highs and it hit our SL right here. And it doesn't matter because we followed our strategy. And that is the key right here. Following your strategy doesn't matter. It hit your SL or TP, whatever it is. We had waited a long time on this chart. Like Monday, we took the trade, and this is Friday today, and we didn't see much of a price action. It's fine. It's like there's so many weeks. You don't have to rush into trading. You have to understand this. There are going to be plenty of trades. Every week you will be trading something, right? And there's a whole lot of future out there in the world, right? Every day you'll get some different chart and then different price actions you can trade from. So you don't need to rush in, you don't need to take a lot of trades, you don't need to be profitable today. What you need to make sure is you survive as long as you can. That's the most important part. What you need to make sure is you don't blow your accounts. Because if you blow your accounts, that means you're losing money and your chances of survival is very low now. So don't do that. It's okay. Always follow your strategy. That's it. Now let's go down to the pairs. I hope you guys have watched the session. So I'll just ask questions directly. Now tell me, what is this point right here? We'll drop this line. Is this a lower high? Is this a lower low? What is this? All right. It was a trick question. It's not a lower high. This one is the lower high. Lower high is right here. This is just one market candle, one green candle, bullish candle. That's it. The lower low is right here. This is the lower high. This is nothing. This is just market structure. That's it. Because there's just one candle and it's an inside body. And then the next candle moved down in the direction clearly, not even closing inside. It just moved down, breaking the low. That's why you need to practice this a lot. This is very important. If you don't have this correct, then that means you won't be able to do price action trading that well. This is the key point. This is very important because when this structure breaks, let's say the price was from here to here, and if the price is consolidating right here, that means until it didn't break this level, price has not been creating anything at all. For example, if I say this is the higher low, this is the higher high, and the price has been moving inside this a long time, that means it has been not creating any higher highs, higher lows, anything. It's just creating normal structures. That's it. It doesn't mean anything. Now, let's do this again. What is this? What is this? Is this a lower low or is this a higher low? What is this? It is lower low and also higher low. I'll tell you how. The market went on from here to here, then again this, this. This is how you have to read the charts. Then this is another high high. Then this structure got broke right here. Then another lower low created, higher high, higher low, then higher high, higher low, higher high, lower low, lower high, lower low, lower high, and lower low. Now this one is higher high. That means this lower low turns higher low. It's not consolidation. It's clear structures. It's pretty simple. Right, here is your lower high. This is the lower low. Then this became bullish. This kept on going till here. Then right here it became bearish. Then bullish, continued bullish trend. Then bearish, bearish, and then bullish. And this is not internal structure because how is this internal structure? This was the price action right here till here, lower low, lower high, lower low. So the market turned bullish from right here and it has been breaking structures again and again. Of course, this is some form of consolidation where in the higher time frame the market is moving within this zone, but it has been creating structures. The market is almost always in a trend. In any time frame, let's say you might say on a daily time frame, the market is consolidating, it's moving in a particular zone. But on lower time frames, when you go down to 4 hour time frame, when you go down to 1 hour time frame, it is definitely in a trend. If you go down to 15-minute time frame, you'll see there is a trend. So it doesn't matter if higher time frames have consolidation, there is some trend going on lower time frames. How is a lower low not broken yet? I mean, this is the lower low, this is the higher high. The structure broke right here from this point, right? So the price went till here and then it came back. This means this is higher low, and then it created higher high. This is higher low. Now, when this higher low breaks, that means a lower low is created, right? So this is lower low, this is lower high, this is lower low, this is lower high, this is lower low. This is continuation of a trend, right? At this point, this is a break of structure, right? I hope this is clear. I want you guys to practice this a lot on these time frames. Go down to lower time frames, see where a lot of noise is present. You will find challenges where noise is there. If there is no noise, if price action is smooth, you won't be able to face these problems. And if you don't face these problems, you're not able to understand what kind of price action you're looking at. If you're just looking at a daily time frame and based on that you want to trade on the 1 hour time frame, it might not do the same thing. Support, resistance, multiple trend analysis, all of this is important, and all of this comes from the basics. And this basics is this: higher high, higher low. If you want to understand trend, if you want to understand trend based trading, then this is the key to it. If you don't understand this, the consolidation, the market continuously breaking structures, then you won't be able to trade it easily. So make sure you practice this more. You already have the video. In this video, I'm already teaching you this, how I am doing it. Again, the rule is this. Right here, I told you this is the lower low and there is these two candles coming down. And for this one, I didn't say that because there is two inside bodies, right? Two inside bodies creating a perfect elbow or an angle. Last, if you see in my first video, I have edited my word. I was using leg. So leg is actually this. I used the wrong word, wrong term. But this is called an elbow or an angle where the price you see is coming up, coming down, creating an angle, staying there, consolidating a bit, and then moving up again. If the price continues, let's say there's a inside body right here and then green candle is this big or something like that, then it's a different story. But you see two inside bodies right here clear, that means it's forming an elbow, it's an angle, and that needs to be recognized as a structure which is low or high or something like that. I hope that is clear. If I am not making sense, let me know because we have to move further from this in the next session. We have to do multiple time frame analysis, we have to do trends. All right. Anyone, if you have question, don't be shy, just ask. It's important. The other person will also learn. You are all here at the end is because you want to learn. So make sure you learn, you ask questions. A consolidation is something like, let's say, let's move. There's no consolidation position, but I'll show you what consolidation means. So yeah, right here. This is consolidation. This is market creating structures, not doing anything. Right here, also, it's a good example. So I'll clearly explain this. even though we see the market is doing structures like this, which is moving slowly, right? But the price has created a higher low right here at this point. This is the inside body and then a green big candle. So it's not another inside body, right? So it didn't consolidate much. So we'll see the price action like this. And then again, right here, there's one inside body, but the green candle moved up. So it didn't stay there. So the price action comes up to this. Now this is the higher high. This is the higher low. This is the higher high. Now at this point, the market has created another structure, right? What is this? Can you guys tell me what is this structure? Is this a higher low? Again, this is not a higher low because the market moved up and then did this. This is not a higher low. This is just a structure. This is just a structure. I told you there can't be a higher low without a higher high. So do you see a higher high right here? In my first session, I've told you that higher low to exist, there should be a higher high. Here we see a higher high, so there is a higher low right here. Here we don't see a higher high at this point. There's no higher high creating here. So this is just a structure. Again, this is just a structure. This is structure. This is your higher low because right now we can see the market moved up, broke the higher high. The structure just before a turn. You can see there's a turn right here, right? The turn just before this one, the higher high is called the higher low. This is the recent structure which has been created, and if this breaks, that means lower low will be created. For example, if candle moves down at this point, then there's a new lower low. If you call this the higher low, then the candle have to come down till here, right? But if only this is broken, then we'll have a new lower low and this will turn down to lower high. I hope this is clear, right? It's pretty simple. You have to just look at the structures and you need to understand these rules. That's why you need to watch these videos once the recording is available again and again, because once this fits, you will be able to trade in a much better way. And it's not like I've been scamming people or something like that. You have been seeing me giving live trades before I take the trade or just when I'm taking the trade. And you have seen the market move into my direction, locking profits. And all of this is just because I understand this. These are the basics. This is very important. Sometimes confusion arises, but I am able to figure that out. In the consolidation, there are some kind of consolidations where even I get confused. But this is how you figure it out. You need to draw these lines and you figure out what the price is doing. Next is, it's not a structure. This one is higher low. This one is a higher low. There's an inside body right here. But the price on the next body, I told you two inside bodies, two candles inside bodies, where the price is not doing much, is just moving horizontally, or the price creating an elbow, moving down, two candles moving down. That means there's an elbow. Right here, we can see it looks like an elbow, but the price has came till here. It's an inside body, and then the price moved up really nice. So this is the higher high, this is the higher low. This is not the higher low. Next, right here, this is not the higher low, right? This is nothing. This is your higher low. Another one right here. And why is this the higher low? Because you can see a clear break of structure. There's a break of structure right here. And this is your higher low. This is your high high. This is your higher low. This is your higher high. This is nothing. This is just market doing its thing. Now at this point, the market has changed right here. This is the lower low because this structure is broken now. The candle has closed below. Is this clear? Make sure you draw this, practice this a lot because this is important. If you don't do this, you'll never be able to understand these basics clearly. Practice is what going to make you perfect on this. So make sure you practice this a lot. Do keep doing this and make sure you spend a lot of time with your charts. Recently on Telegram, I told you, right? on the primary group where the price is going to come back. There was a bearish candle creating on Euro JPY on 4-hour time frame. On 4-hour time frame, yeah, it's this one. So the candle was here, and I said that price is going to come up. It's not that candle will make a bullish structure or a bullish candle. What it will do is it will come back, retest this level, and then go down. If you are in the primary group, you will see that message there. And how did I figure that? If you start looking at the charts, spend time with the charts, you will see this. The market doesn't move without creating a wick. In 15-minute time frame, it's a different story. 30-minute, it's a different story. On 4 hour, how many times price has moved without creating wicks? You can see there's a very small wick here, but are there any more candles like this which has a small wick like this? Like literally, it doesn't exist. There's second one here. So imagine there are so many candles on your screen. Let's measure this. Let's see how many candles we are looking at right now. Okay, there are three, four candles now. Four candles. We are able to see 88 candles. Yeah, 88 candles. And from 88 candles, there are only three, four candles which has a small wick. And right here, when the price was moving down, there was no wick. When you see no wick, you need to understand that the price might come up. Now, this is just a 4 hour time frame where your price action is happening. But if you go up to the daily time frame and weekly time frame, this information is very important. Let's say the price opens up and starts moving without a wick towards upside. Now, how many weekly candles you can see without a wick? There's one right here, and there's second right here. So again, it's a very rare thing, right? It's a very rare thing. You need to understand that before taking a trade, a wick is created. All of these things are present. That's the things I look for. So it's very difficult to put it in words. There are so many information that I know, but this is how I'm going to share. In each session, I'll try to share an idea which is very rare, which a lot of people don't understand. So you need to understand this when you're taking a trade. Is there a weekly wick present or not? All of this information is going to make you take quality trades. Now, back to the session. I think you guys are clear now what structure is. If you want me to do this more, just ask. Or we just move to support and resistance. All right. Now, let's look at this structure. There's a very clear thing right here that the market right here has been creating a lot of structures, but it's not creating any higher high, any higher low. You can see this is the higher high. This is nothing. These are nothing. This again, it's nothing. All of this price action is nothing. And why is that so? Can anyone help me? I can see a lot of structures happening here. Can you guys answer why all of this is nothing? Yeah. There's no new higher high, there's no new lower low. All this time, all this time, the price has moved inside this zone and it broke structure right here at this point. So tell me which one of these is the new higher low? One, two, three, right? I'll just name this one. Tell me, please respond which one is the new higher low. Two and three is wrong, one is right. The reason there are two inside bodies. There are two inside bodies. There is a green candle, of course, but it's an inside body. That means it created an elbow, it's created an angle. This one, it is a clear, second candle is clear up. And then third one right here it's the lowest point. It's the lowest point of a structure. That's it, nothing else. It can be used for support and resistance, but it doesn't mean anything else. It's just a structure. This is your high low. Make sure you practice this, watch this video again, watch the first session again. Make sure you clear things up. First session, I have seen a lot of you haven't watched it. I can see the views, I can see everything. A lot of you haven't watched it. I want you to watch it, clearly understand it. There's a keyword change in the audio of that video. So it might be a little troublesome where I've just replaced leg with the word angle, right? But everything else is perfect. So make sure you watch that video, understand it. The link is available in the Telegram group. So make sure you watch it. All right. Now, from here to here, tell me what is this point right here. What is this point? Is it nothing? Is it a structure? Is it uh, higher low? Is it higher high? Is it lower low? Is it lower high? What is it? All of you, respond quick. So yeah, this is a lower low. This is not just structure. This is a lower low. And the reason behind it, you see this was the higher low, this is the higher high, and then higher low, this is the higher high, and then this is lower low. Because this structure right here is broken now because it moved below this. This is the higher low. If price breaks the higher low, then it's creating a lower low. Practice this a lot. It's very important. Watch these videos again. This video will be available tomorrow. Now, as soon as you're here, right? As soon as you're here, what do you see? You see prices creating lows and prices creating highs, right? A lot of lows exist like this one, these, right? And then this is there support for this? Yeah. There's a resistance, there's a support, right? So a lot of this exists, but which ones are the best ones? You know, from which you can trade, and how do you understand which resistance is going to be your target or which support is going to be a target? Because we set targets based on support and resistance, we set target based on reversal points. So we decide that based on how many touches it have, and does the price use that touch to climb, or does that price use that touch to reverse completely, right? So at this point you can see, let's go from the top. Always look from the top and always look from the bottom when creating support. For resistance, look from top. Now from top, do we have any structure here? Nothing. Okay, right here there is something, but it's not matching anything to what I want. There is some touches here. There is some touches here. Okay, let's drop this line. So imagine if someone was trading at this point and they entered a trade around this area, they could have easily seen this target. Easily seen this target. And how? Because if you look at the price action right here, there's touch, one, two, almost three, four touches. Then there's this right here, five, six, seven. So it's so easy to set your targets when you have these lines, when you have this clear idea. Now let's go back to where we were. Yeah. So it's a good resistance point. We can mark this as daily SR. Make sure you always mark your lines. It's very important that you have names for these lines, because let's say you're looking down on 1 hour time frame and you have a support or resistance on a 4 hour time frame, and you're looking for a close above the line, right? So how would you know that which kind of support resistance lines this is? What kind of time frame you're looking to close on? If you have a 4 hour support resistance, that means the candle needs to close on the 4 hour time frame. If it closes on 1 hour time frame just above the line, that means it could be a wick for the 4 hour time frame. You need to see a proper close on the 4 hour time frame. That's why it's very important that you name these lines. And it's very easy to do that again. Go in the style section, like select the line thickness, color, whatever you want, and then name it, save it as a template, and that's it. I have these lines: EMA, daily, weekly SR, daily SR. But weekly time frame is something which I rarely use because I like to do with a little less noise. Weekly is too much noise for me. I do it with daily time frame, 4 hour time frame, 1 hour time frame, 2 hour time frame. These time frames are enough to become profitable. But at some point, if you are not able to get a good analysis, it's always better to zoom out. By zooming out, I mean going to a higher time frame and looking at what price action looks like. Now, again, let's see what this line means. If we drop a line right here, we look it in history. There's one touch right here, but it's not a good place. It's there. There is some touches, one, two. So recent history is not giving us really good touches. So what we do is we move this a little lower. Now there's a touch close right here. It doesn't matter. This is a fresh candle, so we won't count it. But this one, two, three, four. There's some action going on, but let's not count that. Now we'll look into this a little more clear. There's a touch. You can see the price is taking a lot of support from exact this line. The candle closure here, the candle, a lot of wicks right here, then around this point. So definitely this is a good support and resistance point, a very good key level. So we need to mark this level. I hope I'm making sense to you guys how I'm doing this. I'm just looking at history and doing this. Also, while going up, you can see this has been used as a reversal point. This, not much, it kept on climbing, but this broke structure. Right here, it kept on climbing, but at this point, it reversed. From here, it was a different story, but this point is a continuation line. You can see the price came here, hit resistance, then continued down. Price came here, hit resistance, but at the end came down, moved up. So this is not a reversal point. Understand this. With support and resistance, you need to understand this as well. You need to look at price action. When you're analyzing a trend or a support resistance line, you that means you're also analyzing price action. What kind of price action the candles are doing when it touches this line. If it's not completely reversing, then you need to look a trade that is not based on reversal. Now, at this point, we have another support. There's a lot of touches here, definitely, and it has been used to reverse here. Here, continue trend, almost reverse. You can see there's a great price action, a lot of touches here, and then it went down. Two touches to go down. So at this point, you can definitely look for a trade which gives a little reversal. And what would be my target? My target would be around here because as soon as the price touched this, the candles went around this area and then came back. So my target won't be this. My target would be the easier ones. Now all of these candles look very small, and you might think like how much price action it contains. But these are daily candles. So that means there's a lot of money to be made on 1 hour time frame, 2 hour time frame, 4 hour time frame based on these candles. I hope I'm making sense. If there's any question, please ask, or I'm continuing this. Now, these lows, I like these lows where price come down. It tells me where the liquidity is sitting, where a lot of orders are sitting. You can see there are orders here at this point. There are orders here at this point. This doesn't mean it directly becomes support. Definitely, you need to look at structures, but these can be your targets. These can be your targets or liquidity points where price can easily reverse. Let's say if the price comes down to this level, you will see a lot of rejection right here from exact this point. If the price comes down to here, you'll see a lot of rejection because now there's a story behind it, right? The price has been moving down with a strong momentum, and then the price reversed. The daily right here became bearish, but because of this point, this is the origin of break of this structure, right? This is where the price originated. This is where a lot of buyers came in. So that means it holds a lot of value. Now you'll see there are some touches here, but when we see the market next time coming here, like if it's not completely based on fundamental, we'll see a reversal at this point, or maybe a good rejection at this point. So your target can't be below this. It doesn't matter, the body or the wicks. A lot of people I have learned from. I was in FXLXG's bootcamp, so he does it with the body candles. Then I have also learned from Rainer Teo. He does with the wicks. So I do it with the wicks because the way I've been seeing at price action, I see that wicks mean a lot of things. Wicks have a lot of value. When these wicks are created, that means at this point there were a lot of sellers, and that's why the price moved down. At this point, around this level, there were a lot of sellers. At this point, there were a lot of buyers. Now, what I do is I try to match this when I'm creating a support or resistance line, move this line in a way where I am trying to have maximum touches and the lowest point. If I'm looking for a support, then I'll try to get the lowest point. Right here I can see there's one touch, and that's why this line is right here. If I move this down, I'll remove two touches, this one and this one. This candle doesn't matter because this touch is here. This is counted as one touch, but this definitely counts as another touch. And this price action is also not fitting in. So what I do is I try to keep it as many touches I can cover. It's as simple as that. You have to make sure that you do that. And whenever taking a trade, for example, right here in the Euro JPY trade, I could see on the 4-hour time frame that the price took a lot of support at this point, around this level. So my stop loss made sure that I'm not just covering the low, I'm also covering the wicks of this area. So when the price comes down, it doesn't hit my stop loss. Eventually, price did came down, but it didn't hit a stop loss at all. It came down 95% and the price moved up. That's a lot of luck as well. But luck comes with practice, with information, with looking at the charts. You can see the price is still moving up. It's really sad to see this because it hit a SL. Not SL, it closed out on a profitable position, but this is not what we wanted. We wanted a trade which would give us 1 is to 3, 1 is to 4, something like that. So I'm not going to look at this position anymore. So I hope this is clear that you need to make sure as many touches is covered, and it needs to be on the time frame. For example, 4-hour time frame, there are some wicks right here. I can't move this line above to cover this touches because this support and resistance is based on daily time frame. So it needs to fulfill what the daily time frame is doing, not the 4-hour time frame. Now we have this. I hope all of this makes sense. So on the weekend, I want you guys to share me the screenshots of, note this down, GBP, USD, Euro USD, USD, JPY. I want you guys, all of you, to send me screenshots of support resistance. You drawing the lines. If you have any thoughts behind it, you need to put it down in the text message. Send it in the group. That's why it's there. You need to make sure you practice this a lot. Support resistance, higher high, higher lows are core to everything we do in price action. I'm not going to cover EMA today because it's pretty simple. I have explained you guys already in the last session. So we are definitely taking trades on lower time frame, but we are using higher time frames to give us a position from where it can, flip or move. For example, let's say, how does the market move? How does the market move? It creates higher highs and higher lows. It's a pretty simple thing, right? But where are the higher lows? Where are the higher lows? If I try to put a line right here, are there any support? Are there any support? There's a support right here, right? Some touches here on the daily time frame. There's one touch here. This is the lowest point, and then there's this lowest point. Now, this is not exact thing because there's not so many touches, but I can definitely put a line on the previous high, because the market, what it does is it considers previous high as rejection zone. So a lot of times you will see the market move like this, goes up, creates higher low, creates higher high, and then continues your, like, creates a higher low at this point. This is the lowest point. Sometimes it goes around this level and then it goes up. A lot of times actually the market comes down to this and then moves up. So this is how trends work, right? So when you look at the daily time frame, let's say you're trading on 1 hour, 4 hour, definitely, but daily time frame, if you're able to figure out a trend, if you're able to figure out a support and resistance, what you do is you understand now that the price is going to hit the support and then it's going to go towards this resistance, right? Now, if I go down to lower time frame, what I see is there's a strategy there. There's a clean structures forming up. I am able to see some reversal, trend changes and everything. So what I do is I take it on the lower time frame with the smallest stop loss. Now, if I try to do this, let's say if I'm looking at daily time frame and if I try to take a trade on a daily time frame, then our stop loss will be huge, right? There might be two, three candles, and then we might never see our TP getting hit in 2 weeks, 3 weeks, something like that. But if we analyze the daily time frames or 4 hour time frame and then go down to 1 hour time frame and take entry on those time frames, we are able to capture large moves. We are able to get higher risk to reward. That is why analyzing daily time frame, weekly time frame, 4 hour time frame is important. I also analyze on 4 hour time frame, not just daily time frame. That's why I said there is multiple time frame analysis we'll be looking at in the future sessions. So we analyze multiple sessions. Based on that, we take decisions. What kind of trade we are looking for? Is it a going to be a bullish trade? Is it going to be a bearish trade? And what kind of structure we want around this point. So there's a lot of things you still don't know you're going to learn in the future sessions. Right now is just support and resistance. So I hope this is clear. EMA is clear. EMAs you need to check down on every time frame and see. We'll also have more sessions, more discussions on EMA. But this is it. Today we are done. I hope everything is clear on this support resistance lines as well as high highs and high lows. If there is any question, please feel free to ask right now. Yeah. So how to identify where higher high starts or lower low starts, right? Now let me tell you, how does it matter? If you are able to see price right in front of you on your screen, definitely don't look it from the phone. When you open this chart, you're able to see structures to a far history, right? You're able to see these candles from July 24. If I go down to 4 hour time frame, I am able to see these candles from August 25. So what I do is when I come to the charts, I look at them like this. That's it. Definitely there might be some structure which would look like this and then come up, maybe just rotate inside this from somewhere around here in the past. But you can't just go on to too much history and use that as information. If something has happened, you can just look at this like this. If you're able to see it clearly, then it's fine. If you're not able to see it clearly, then just forget about it, right? Look at your current screen, just zoom it around this level and see what is it creating, right? Now you can come closer, you can mark your levels where you see a break of structure and everything. It's always better to write it down on your screen. There's this text option available. You can write it down. You can draw lines and everything. Make sure that you note all of this stuff on your charts on the current pair. Don't go on writing in your book or anything. Just write it down here on your screen. So make sure when you come here, you are able to look at that text clearly. Now, when I come to this, I can see there's a lower high, there's a lower low, there's the structure in between, and then there's a higher high, and this one is a high low. It's as clear as this. I don't have to go in history and then look at this. I hope this clears your question. Please practice this. I've been saying this again and again. This is very important. All of this, if you don't understand this at all the future sessions will go bouncer on you. You won't be able to formulate a strategy. And if you even try to do that, you will be only trading based on your luck, not based on technical analysis. So make sure you clear this out. You understand price action. You understand higher, low highs, everything. Draw those lines the way I did for you. All right. I'll see you guys tomorrow for weekend analysis. I'll share the link. These sessions are important because I also share idea. Right now, you're able to see only what I'm doing based on the basic stuff. But on the analysis day, I do go a little deeper. I'm sharing with you how I'm executing, how I'm taking these trades. So these sessions are as important as these ones, right? A little advanced, of course, but eventually it will all fit together for you guys. All right. I'll see you tomorrow then. Bye.